Plunge, with more shares coming. This week's Alphabet and China's parliament convenes. Chinese markets have plunged to their lowest levels since last July. The Shanghai Composite Index closed March 5th at 4,293, down 18% since the start of the year, and has lost almost a third of its value from last year's high. The CSI 300 index sank below 5,000 since our last show and is now officially bearish, having declined 21% in the past 6 weeks. Shanghai B shares appear stuck around 300 and Shenzhen Bs around 600. Word is, hedge fund managers in Hong Kong and elsewhere believe Chinese domestic shares are unsustainable, and investors are worried about oversupply of shares, particularly with new issues planned by firms already listed on the Shanghai Exchange. Octogenarian Peking University professor Li Yinning, known as the father of China's modern stock market, believes Chinese shares have finished their readjustment and expects no bear market this year. But Chinese securities regulators are concerned about secondary share issues and say they will strictly examine all new applications. Signals are mixed, as today, in his opening address at the National People's Congress, Wen Jiabao said China will introduce a new stock market for growth enterprises sometime in the near future. The market envisioned is a NASDAQ-type board for small startups, particularly high-tech companies, to raise funds. And Chinese equity investors will have additional outlets soon. China's banking regulators have given the green light for the Qualified Domestic Institutional Investor Program to invest in Tokyo stocks and mutual funds, with plans to allow Chinese investors to buy stocks in the USA and Germany coming. Also, Wen Jiabao called today for ramping up China's bond and futures markets. Two prominent investor voices weighed in on the growing controversy around sovereign wealth funds, the China Investment Corporation in particular. In last week's shareholder letter, Warren Buffett said, "Why should we complain when they, foreign governments, choose our U.S. stocks over bonds? Our country's weakening currency," Buffett said, "is not the fault of OPEC, or China, etc. In defending a sensible trade policy, the U.S. should not single out countries to punish or industries to protect." At an investment conference in Abu Dhabi, Alan Greenspan came out in favor of global sovereign wealth funds, saying they have done a good job on balance and that restrictions on them would be a very bad idea. This week's Alphabet starts with 0941.HK, China Mobile, one of the hottest red chips on the Hong Kong Exchange. The long-awaited domestic A-share listing in Shanghai is moving forward, but CEO Wang Zhangzhou told the South China Morning Post the size of the offering won't be very big. Investor demand, however, for the shares is expected to be very strong. Next is 3968.HK and 60036.SS, China Railway Construction, which raised billions in Hong Kong and Shanghai. The share offering was oversubscribed 250 times in Hong Kong and was the fourth most popular IPO in Shanghai. On the horizon, China Merchants Bank wants to buy a stake of the planned gigantic IPO of Visa, although United States regulations would limit that stake to only 20%. China Merchants, traded in Hong Kong under symbol 0133.HK, is the top credit card issuer in China. A stake in Visa would greatly enhance its services via the Visa network. Taiwan-based Want China, a top maker of snack foods and beverages, will IPO on Hong Kong at the end of the month and hopes to raise up to $1.5 billion US, the bulk of which will be used to build plants in China to increase its production there. The company's parent, Want Holdings, is already listed on the Singapore Exchange under symbol W08. Finally, China Pacific Insurance Group received approval to IPO in Hong Kong. Pacific is the third largest insurance business in China and hopes to sell up to 900 million new shares. I have no details on pricing at this time. China's National People's Congress convened today in Beijing. It is easy for foreign observers, particularly American media, to dismiss the Chinese Congress as a rubber stamp farce. But as I've pointed out before, you ignore the work of the NPC at your peril. The Congress affirms the direction China is going and gives law to Beijing's policies. The NPC is in session until March 19. I'll have much more to say about this year's session in the next episode. I'll see you next time.